It's a fantastic program. I'm really happy that I took the leap and decided to do it. I've gotten out of the program far more than the cost of the program, both in terms of dollars and time. So if you're really serious about managing your personal portfolio, the real question is, can you afford to not take the course and leave that upside on the table effectively for the rest of your life?
Thank you, Michael, for accepting this interview. Could you just take a minute to introduce yourself, please?
Sure. I live in the United States. I started investing in the stock market when I was in my 20s, so it's been a few decades now. So basically, I live off my portfolio. That's my only source of income. And so that leads me to be a fairly conservative investor, I would say. Far more interested in making sure that I don't make any big costly mistakes than trying to go for a big win of any sort. Ideally, looking for sort of a slow and steady approach. That's what I do.
And what was your situation and your struggles before joining the coaching program?
I have been investing for quite a few years, and frankly, having mixed results. Overall, I did pretty well, but there always seemed to be a couple of stocks that I would pick that would drag down my overall performance, the total averages. And my approach was mostly aligned with sort of, I guess you would call it classic Graham and Dodd value kind of screening. Very low PE stocks that were temporarily beaten up. Buy them when they're out of favor, wait for valuations to normalize, sell when they got to reasonable valuation, rinse and repeat. And so that mostly works, but as I said, you always have a few stinkers in the portfolio that take down the averages. But there's three problems with that approach. First is those value traps that you buy and they just go down and down and down, and so that's part of the problem. The second problem is when things work out well, you sell when things get back to fair value. Now you're sitting on cash, and sometimes that's fine because there's something else you want to buy. But other times, and this would happen often, the market is elevated. I'm looking around and I don't find anything I'm particularly compelled to buy, and so I would run significant cash balances for extended periods of time occasionally. That's kind of a problem. And then the third problem, of course, is there's a tax. It's not very tax efficient. Every time you make a sale, it's taxable. So between those three, it worked, but there's some downsides. But you asked me about struggles. So I think my struggles were probably, on the one hand, looking for a more systematic method of deciding what to buy, when to sell. And I kind of had in my mind what I really needed is sort of like when a pilot takes off, he has a checklist of all the things he's got to do to make sure everything is proper. And I needed something like that I could go through and make sure that I wasn't missing anything. I had sort of a loose set of criteria, but I wasn't very systematic about it. And the other thing was some way, I was very aware of those value traps that were taking down my averages. I had gone back and calculated, well, if I could take out, say, half of those value trap losers, my averages would have gone up significantly. Yeah. So just a handful of companies were really dragging things down. So some way to screen out those value traps to get my performance averages overall was the other thing that was kind of a point of pain for me.
Yeah, this is good. Having a systematic approach can remove some of the value traps. Maybe not all of them, but if you can have a system and you remove one or two value traps every year, everything compounds. So your whole performance is getting lifted. And do you remember how you felt when you joined us after the first weeks of working with me and with the group?
Yeah, the first few weeks, so I mostly focused on going through during the early time the video library. The whole series is quite a bit of lessons that are pre-recorded that we can do offline. So going through that whole video training library, and we were additionally meeting twice a week. And I found the rhythm of going through the analysis of a series of companies to be very helpful to sort of see how that works. And I noticed, I remember thinking about how the business analysis template was the same for all the companies, but of course every company is unique, and so there'd be hair on the deal, if you will, strange things going on that we'd have to go down various paths to explore. And so finding those specific issues and digging through the questions that would come up, how do we get to the answers, that was really helpful to go through that. I expanded my screening criteria. For example, I had never paid any attention to stock-based compensation previously. SBC is something I was kind of aware of, but never really spent much time thinking about. And it turns out that it can be, sometimes it doesn't matter much, but sometimes it matters a lot. And so it's now one of the first things that I look at, because that's an immediate disqualifier in some cases for some companies. Another thing that I was very aware of was Warren Buffett talks about, the quality of management, and you need to make sure you're with honest, hardworking, smart people. But how do you measure that, right? So for me, it was always like, okay, I know it's important, but I haven't a clue how to go about figuring out whether a management team is any good or not. And you gave us some very specific, tangible things we can explore to get a good indication. I think that was really helpful. So it took some time to get over the learning curve, the initial weeks. But the other thing is, there's specific software tools that we use in the program that were new to me. So getting up to speed on those and making sure that I was comfortable using them and how to drill down into the companies. You've been using them for quite a while, and I remember early on just watching you navigate through the different tools and how you would get the answers to specific questions very quickly was a learning process in and of itself. And so that was really helpful. I mean, if I I would try to answer, a question would come up and I'd try to answer it on my own, and I'd spend, 15 minutes, 20 minutes trying to figure out where to get the answer. And then you would do it in 30 seconds. It's like, oh, that's what So anyway, I would say it was exactly what I was looking for, sort of a repeatable process that I could use. It would add structure to what I was doing and make sure I wasn't missing anything obvious.
Wonderful. By the way, this is a group program. We have calls every week. What did being in a group bring you?
Yeah, so I would say, without overstating it too much, it may have been the best part of the whole program, right? Stock analysis is a fairly solitary activity.
Yes.
It can be very, very, separating and lonely at times. I thought it was really helpful as we're going through a company analysis as a team to have other people also asking questions about what they were seeing. And they would often spot issues or problems or raise questions that I didn't even notice. And that was really helpful as well. So we also, questions would come up sometimes about the long-term prospects for a company, and we would get into some really interesting discussions bordering on debates about, how the future of the company might evolve, and the emerging threats and how well they weren't positioned to respond to them. That sort of intellectual exercise of debating, the puts and takes of a situation, I thought were really helpful, and I think I personally got a lot out of it. Once you got all the basic analytic framework in place, if you have a series of other people that also have that same analytic framework in place, now you're talking about a much higher level of sophistication of questions, which actually can be very interesting. Oh, and I should probably mention that we had people in the group that were from all over the world. I'm American. There were a few other Americans. We had Europeans. We had a couple of Asians, guys from the Middle East. I mean, a wide range of different geographies, backgrounds, and also industries that they had worked in at one time or another. And so, they bring different things to the table. They bring different kinds of questions, different perspectives, different priorities. And so I think, being part of the group really broadened my perspective, not just on the individual security analysis, but also how to build an effective portfolio synergistically, and how to think about risk mitigation. Different people have different approaches. None are right or wrong, but it's different approaches, and having that range of different opinions, I think, was a really healthy thing.
Yeah, you raise a very good point. If you have many people from many countries, you don't know what you don't know. So maybe you are analyzing a company. Somebody on the call has worked with this company. Somebody has an edge that you don't have. So you can have some specific insights for specific companies. And this is the beauty of working as a group rather than alone. As you say, it's a solitary world. It's a hobby, a job, investing when you are most of the time alone. So it's always good to be surrounded by like-minded, serious people. And what would you say to someone who hesitates to join the coaching program? Somebody who watches the YouTube videos and hesitates to book a call and join us?
Yeah, well, I will say it's not for everyone. I think I would say you teach a very specific approach to investing. which I would characterize as sort of a modern version of Buffett and Munger, basically long-term buy and hold of exceptionally high-quality companies. And so anyone who's considering it should probably watch some of your videos to get a sense, because you've got a lot of stuff that's out there in the public on YouTube. But get a sense for how you do analysis. In the program, we go a lot deeper, but if that overall approach is not appealing, then this is probably not the program for you. For myself, one of the biggest hesitations initially was biting off the financial cost. The program's not cheap, and as Jack Bogle used to say, you get what you don't pay for. And so I spent a little bit of time thinking about that, and the concern is the cost is up front and is for sure, whereas any benefit is down the road and speculative. But I got past that by thinking about what a 1% improvement to portfolio performance would be worth to me over time, because you get it every year thereafter if you get a benefit. And I'm pretty confident that what I learned will increase my performance by significantly more than that. But I mean, I think that's kind of the calculus, the raw math of the financial commitment.
And you have many programs, investing programs in the internet. Why did you choose me and my coaching program instead of another one?
Well, I probably watched 20 of your videos on YouTube before we had our initial call. So I had a little bit of a sense of kind of how you approach things. And your overall approach really resonated with me. I like that you're highly evidence-based, very quantitative, and even with companies, in some cases, that you owned yourself and you liked, you would point out as you were doing the analysis things you didn't like about the company as you would find them. And so I really like that balanced, rational approach to looking at companies. And as I said, I also like the idea of joining a group of investors that were all coming from a similar approach. They're not day traders. They're not speculating on Bitcoin. They're all trying to estimate fair values of real companies using standard proven techniques. And so being part of a team of people doing that, I thought would be really helpful.
Good. Now that you have been here with us for a couple of months, what goals did you achieve? I mean, how has this program impacted your approach to investing? Did you avoid some value traps, or what goals did you achieve over the past couple of months?
Yeah, well, so as I said, there were two things that I was trying to accomplish primarily as a result of joining it. First is to create an objective, repeatable process for making investment decisions. And the second was to improve my ability to screen out those value traps that were dragging down my performance. And for sure, both of those objectives were met. And I additionally would say that the regular discussion and debate with both you and the other team members that were participating, they were a lot of fun, and they added quite a bit of color to the overall process of analysis.
This is our weekly meeting now, when we can discuss what is happening, what are the best stocks, etc., etc.
Yeah.
Very hard question for you. Do you regret joining us? Do you regret joining this coaching program?
Yeah, no regrets whatsoever. I've gotten out of the program far more than the cost of the program, both in terms of dollars and time. And it was a lot of fun. I found myself every week looking forward to the calls. And to digging into the hot topics of the week and the companies that we would get into, and the interactions with everybody were a lot of fun.
This is great. And would you recommend this coaching program?
Yeah, so I would say that I would strongly recommend it. You pay once, you're going to get the benefit for the rest of your life of your investment career. And so I think once you get a portfolio that's a reasonable size, that you can really make a difference in your results as a result of these investment capabilities, it's probably worth pursuing down at that point. So bottom line, I think this program will make almost anybody a better investor. Overall, I would say, it's a fantastic program. I'm really happy that I took the leap and decided to do it, and certainly recommend it for anyone else. So if you're really serious about managing your personal portfolio, the real question is, can you afford to not take the course and leave that upside on the table effectively for the rest of your life?